Hi everybody, Nitzan Moser here, the traveling investor, and I want to talk to you today about a few more definitions in the real estate world. The first one is equity. What is equity? Equity is the amount of money or value that the property increases or that you have after you've paid off your debt service. Okay, so let's say you buy a property for $1 million and you have a $500,000 mortgage on it. So right now your equity is $500,000 because it's your property value, which is $1 million you paid for it, minus the total liability, which is your debt service, your mortgage payment. So if you've got $1 million property and you've got $500,000 mortgage, your equity is what's left over after you've paid your debt service. So that's $500,000. Now let's say you're buying a multifamily that is a strong value add property, meaning it's got a lot of deferred maintenance, management issues. It's got an out of state, out of mind, out of connection property owner, and we go in and we buy this property and we can now start fixing it, putting life into it, increasing the rents by renovating the insides and the outside. So now we've gotten a property that we bought, which was $1 million, right? And now let's say we go out and we raise the rents and everything and we add value to it and we increase it, and now we turn around and we sell it. And let's say we sell it for $1.5 million. We still have that $500,000 mortgage, right? But now we sold it for $1.5 million. $1.5 million minus the debt service, the $500,000, that leaves us with $1 million in equity. So that's why we do this business. That's why we're in real estate, so that we can increase the equity of our asset so that we can make a lot of money. All right, let's move on to the next one. The next definition is a broker-dealer. Not people getting involved in the commercial real estate world don't really understand or know what a broker-dealer is. However, a broker-dealer can really be helpful for people that are looking to write or to raise bigger equity checks for the properties. For example, if you're doing a $20 million property and you've got a lender that's going to give you 70% of that, they're going to give you $14 million as a debt service, right? So now you got to come up with the rest. You got to come up with that equity, right? The equity, $20 million minus 14 million is $6 million in equity that we have to come up with, right? So now it's a lot more cumbersome to go out and to raise that capital from friends and family on one-off individuals speaking and raising capital. So a lot of times what we'll do is we'll look at family offices, we'll look at REITs, at funds, we'll even go to broker-dealers. A broker-dealer is a person who is licensed and commissioned under the SEC regulations to be able to go out and raise capital for other people and get a commission. That's an awesome thing because these people have connections already that they've built through their relationships and can help raise money. You want to build these relationships with the broker-dealers before you have a property under contract, obviously, right? So broker-dealers can play a very integral part in helping you raise capital, and usually their fees are anywhere between 2 to 5%. It could go anywhere in that range. Just be prepared when you're underwriting to have a line item in there for the broker-dealer. Okay, you want to make sure that they're calculated inside your numbers so that you can be conservative. Now, we hear a lot about accredited versus sophisticated investors, and what really is an accredited investor and what is a sophisticated investor, and why do we need them? And now with the new regulations that have come out, we can approach accredited investors in many different ways. So an accredited investor is someone that has net worth of above $1 million, or they make $200,000 individually or jointly with their spouse, $300,000. That qualifies you as an accredited investor. A sophisticated investor is someone who doesn't fall into those two criteria. They don't have a net worth of $1 million. They don't make $200,000 independently or jointly with $300,000 with their spouse. However, they do have investing experience. They have business experience. They've invested in the stock market. They own their own businesses. They've done a little real estate investing here and there. They're sophisticated, meaning they understand the risks and so forth, so they have knowledge about it. The third type, which I didn't put here, is what we like to call the person on the street. That's the mom and pop, the people that, that don't have any money saved up, that say, here's my last $10,000, this is all I have left. These are the investors that we personally don't go after. Okay, we like to stick with the accredited and sophisticated investors. Now, the new regulations that have come out with raising capital, you can now go out and advertise your offerings. There's certain ways you can advertise and certain places that you can advertise. However, when you're doing that public advertising, you can only accept accredited investors into your opportunities. You cannot accept any sophisticated investors that come in off of that ad for that specific property. There's a lot of regulations and a lot of things that you got to really understand and the details. So it's really important for you to go and get a great SEC attorney that's part of your team, so they can help guide you between the accredited and sophisticated investors and the different types of offerings that you can create. Now, with certain with certain offerings, you can have up to 35 sophisticated investors and an unlimited amount of accredited investors. So something to think about when you're looking to raise capital for your project. The next thing I'd like to talk about is pro forma numbers versus actual numbers. Now, when you're talking to brokers, a lot of times what they're going to do is they're going to send you the pro forma numbers of the property, what they think is the value that you can add to the property, and they will paint a glorious picture for you. They will paint a picture where you're going to start salivating. Oh my God, I don't understand. If it's such a great opportunity, why aren't the sellers doing this? Why are they selling? So that's another thing that we're going to talk about later on in another video is the story behind the asset. But right now, let's stick to the pro forma and actuals. So pro forma means once we've analyzed the property, once we've looked at the comparables and we've seen where our rents are and where we can take the rents to, then we go out and we create our projections. What we see is our business plan. And this is our pro forma numbers, right? This is what the brokers are going to send to us. They're going to send what they see is the process, is the journey of the project when you're adding value to it. That's great to see what they say, but when you're underwriting a property, you want to make sure that you're creating your own numbers and you're doing your own underwriting. Do not ever rely on anybody else's underwriting. Always underwrite yourself. So that's the pro forma numbers. Actual numbers are just that, the actual numbers of the property. What is the property doing now? We always ask to see the T12, the trailing 12-month income and expense report. And generally, we like to see 3 years of that. And why 3 years? Because then we can see the ups and downs, the trends. We can see where the anomalies happen, where there's value to be added and whatnot. So it's really it's a tool to use to understand where the property is and where it's going and what's the story behind it, right? Because if a property is historically 80% occupied and you see that they're throwing money towards marketing constantly, that should be a red flag. That should be something saying, hey, we need to check out what's going on. So your actual numbers are the numbers that are actually happening now, the real life taxes, the real life insurance, and all this. Then once you look at what the property is doing, then you can call up the insurance broker. You can do your own real estate tax numbers. You can look at all the vendors, see where you can trim some fat, see where it needs to be some blown up a little bit more. Then you create your pro forma numbers. So I hope this has been helpful. My name is Nitzan Mosri. I'm the Traveling Investor. If you've liked this video and you've got some good content out of it, do me a favor, go down below, subscribe to my YouTube channel, The Traveling Investor. You can find me on Instagram and on Facebook as well. I look forward to seeing you somewhere on Spaceship Earth. Take care.